Right, year 11s, we're going to look at the basic calculations that are involved with tax. Okay, so we're looking at the examples, and this is on page 30. Okay, so we've got this concept of taxable income. All right, so remember, taxable income is essentially the amount that is used to calculate all the taxes. And it's the gross minus the deductions. Okay, so the gross is before anything's taken out, and then any work-related expenses, charity donations, that kind of stuff gets all totaled up, and you subtract it from that. Okay, so it's just pretty straightforward. Taxable income, TI will do it. Taxable income is your gross minus the deductions. So in this case, all the deductions have been added up to that, and you simply subtract, and it's 61,830. Okay, so without the deductions, this person's tax will be based on that, but because there's deductions, it'll be based on that. Okay. All right. So Chris earns a gross income of 45,300, and has the following deductions to claim. So there's uniform washing, uniform purchase, and safety gear. What is her taxable income? So it's the same principle. Taxable income is the gross, the annual gross, so it's 45,300 minus, and then we're going to add up all the stuff here, all the deductions. So it's 92 plus 350 plus 460. Okay, so if you did that and include the brackets, you can do all that in one go with your calculator, or if you wanted to do it piece by piece, let's figure out the brackets first. 92 plus 350 plus 460, so that's $902. So that's what we're going to reduce the taxable income by. Okay, so 45,300 minus 902, that's 44,398. Okay, so instead of the tax being based on that, instead it'd be based on that. Okay. Otto earns $633 a week gross before tax for 48 weeks a year. Why not 52 weeks a year? There's 52 weeks in a year. Well, this guy, he has 48 pay weeks. So his work doesn't pay him for 4 weeks holiday. That's why there's the 48 there. Okay, his gross annual income. That's per week. We want annual for the whole year, so it's just 633 times 48, and that ends up being 30,384. Okay. All right, so each week he pays $69.50 in tax. So every time he's paid, that much is taken out in tax. What is the total tax he pays per year? Well, again, he's not taxed every single week of the year. He's only taxed when he gets paid. So there's 48 times he gets taxed. $69.50 times 48, that's 3,336. All right, so that's his gross income. That's not what reaches his bank account because this much is taken out. Okay. During the year, he donated $240 to charity and has $1,300 in work-related expenses. What is his taxable income? So these two combined, they are the deductions. All right, so taxable income is 30,384. That's his gross annual, subtracting all his deductions. So there's the charity stuff plus work-related expenses. So if you feed all that into the calculator, you'll get 28,844. Okay. So what actually happens is, this is what as his tax goes through the financial year, this is what it's based on. But now, at the end of the financial year, hey, which should have been based on that. Okay, so according to the ATO, Otto should have paid $28.45. That's not what he did pay, that's what he should have paid. What refund does he get from the ATO at tax time? All right, so That there, that's what he did actually pay. But now the question is, well, if that's what he should have paid though, well, what kind of a refund does he get? So he did pay that, okay? But he should have paid that, so they owe him some money back. Just subtract the two, and you get $491, okay? So a tax refund, the reason why it exists is because, let's change colours here. The reason why it exists, this is the gross, and at the start of the financial year, that's what they base things on, because they don't know how many deductions you're going to get. They actually assume you're not going to get any deductions. So based on that, they figure out that amount, and they steadily take it out as the weeks go by. But you collect these, okay? So it turns out, well, actually they should have based the tax on that amount, not that amount. So this, if you want this bit here, that's looking forward at the start of the financial year, but this bit is looking back at the end of the financial year. Hey, that's what it should have been based on. So based on that, bang, well, that there is what we should have paid. We did pay that, but we should have paid that. We paid too much. Mr. Government, you owe us some money back, okay? This is why you need to collect deductions, okay? You need to keep your receipts. You need to know what you can and can't claim, because that is how you get a refund at the end of the financial year. Alrighty, that'll do.